The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
As we come back for another wonderful edition, it is August the 14th, Tuesday. It is VJ Day, also known as Victory in the Pacific Day. Some people celebrate it on the 14th, some on the 15th, and some in September when the truce was formally signed on the deck of the Missouri. I lived very close to, in my teens, let me put it that way, actually from about 10 till, I was probably about 30 when I left the Independence area, but it was very close to Truman's home. I always wondered about those people that all gave Harry Truman a bad time for dropping the bomb. I think most of those people don't know enough history. They don't know that there were about 250,000 people a month that the Japanese were killing, mostly in China and in Korea. When they weren't busy killing them, they were turning the women into prostitutes for the army, and pretty much had made a plan to make every man, woman, and child a warrior until we gave up. And I think when you look back on it, 150,000 people, depending on which number you want to use, was probably a whole lot less than, if it would have been 2 years, we would have been into another, probably 2, 3, 4 million people in China and in Korea. It was sometimes there's no great answer. You have to take the less of two evils. And I think it's probably a very wise decision. It isn't easy to order the deaths of innocents, but at some point you have to actually decide what is the less of two evils. And Harry Truman, God rest his soul, did it. Kind of interesting that Harry Truman ended up being president. He basically was knee-deep in the crooks in Kansas City. There was the kind of machine that you used to find even today now in Chicago. But that machine and the mob were quite active in the 30s and 40s in Kansas City. Later on, if you ever watch Casino, you'll see that the mob bosses that actually ran Las Vegas had skimmed off of it. Big-time Kansas City boys. They had the action out there. And it's kind of interesting to see Godfather, where he was kind of running the casinos, kind of thinly veiled versions of the Kansas City mob bosses, but they were not in living on a lake in Nevada somewhere. They were pretty much all around Chicago and Kansas City, and they shared all the money. But I used to drive by, or actually ride my bicycle by Truman's house early on, and of course, being in that area, they spent a lot of time on the history of Harry Truman. And of course, being in the 70s, still had some of my school teachers that were actively, or did actively fight in that war. My dad was just probably about 2 years too late. He became one of the first, in fact, the first commissioned Air Force officer when the Army Air Corps turned into the Air Force. And I think it was sometime in the summer of '46. But victory over Japan Day, a great day. We left the place better than we found it. And sometimes the best weapon you have to use, you only use once, and then that's it. And while we ended up using it twice, I think the answer is that it scared the dickens out of everybody enough that mutual assured destruction has worked for all these years. The other thing I actually found out today is that 5% of Omaha Beach in France is still metal, and that was just the massive amount of shrapnel available on there. But kind of nice to know that in 1945 we finally got and finished a war that consumed almost 70 million lives. We are looking at a chart, if you're watching Tiger TV, of the VIX over time. There are periods in bull markets where you get a long, protracted lower VIX number. If you're looking at it, we have from about 2004 to 2007, the VIX averaging somewhere around 18 and going down to about 10 in 2007. Long before everything blew up, the VIX started moving up. Was starting to get some fairly decent warnings, but it gotten back up to about 20 when the wheels started falling off. Of course, got to over 80 very late part of 2008. But over time, the VIX is a pretty good indication of fear. One thing I dislike right now, and that is we are getting back to those lows, and could it be the start of the same kind of 2000? What is it? March of 2004 to 2007 rally? It could be. Unfortunately, we do not see increasing volumes. We're seeing actually negative volumes. We're going to get to a lot of the things that force that, but I would feel much better that this was a bull market if I saw some fear. I'm seeing a huge amount of just lack of fear out here. Always scary. Face Deals. Face Deals is a camera put in retail locations that can recognize shoppers from their Facebook pictures. And as they enter a shop, it will then offer them discounts by sending them to your mobile device. Boy, this is getting awful scary, isn't it? I don't know what people are signing up for, but Facebook going to be in. I don't know. Maybe I read the Orwell books just too many times, but seems awful scary to me. But kind of an interesting way of making money, and maybe way that Facebook actually can in the future. In the auto bailout, as we track that, I know a lot of people have been watching General Motors. General Motors has been kind of on the mind of a lot of people because it had been hitting lows. Let me go ahead and pop up a chart of General Motors real quick as we go through this. It had bounced off lows. I think I brought this up on the show where it had actually tested the previous low at $19.24 on June 29th. That had 13 million shares. It got below it with 8.7 as a high, and it's kind of moved up a little bit on it. But what we have now is a report to Congress that came out Friday. It is boosting its forecast of expected losses by more than $3.3 billion to almost $25.1 billion, up for $21.7 billion in the last quarterly update, mostly because they're not able to sell any kind of volume in the stock that still is heavily owned by U.S. taxpayers. Don't look for this thing to go anywhere in the near future until the government's busy or done dumping out shares on it. On the move today, we've got Coors, HD, Home Depot, Groupon, and Estee Lauder. Coors came out with earnings last night, pretty much blew them away. I think what most people are saying is that Coach, their huge competitor, is getting a whole lot less floor space, and one of the few, I probably count, probably even on 2 or 3 fingers, of the good IPOs that came out over the last year. Out of the probably 150 IPOs, this, LinkedIn, probably the only ones that look fairly good. The reason I think they bounced as hard as they did is they actually, in countries that were doing poor in Europe, have been doing better. Less expensive than Prada, higher on the level than Coach. Apparently the handbag sales and some of the luggage in Europe is still highly coveted, being a little less expensive than Prada, and of course higher in the cachet factor of Coach, which has been having some problems. Other ones that, what do we have out here that caught my eye here. Coors HD. HD was up a little. Groupon is probably the one that I find most interesting today. GRPN. And that is because it's in a problematic dust spiral. That dust spiral is when you get to $5. Most funds that either bought this and even some street names are unable to hold stocks under $5. This thing's going to make it there like a rocket, forcing those people holding to sell. And again, I don't think you can get any shares of this short. There were a few options available. Most people were not betting on on this much of a hit. I figured that we eventually were going to get to that $5 mark. When it does, probably going to take a few months for the funds that legally cannot hold them any longer to start passing them out. But when it gets this close and you're a street name and you want to buy this thing, you're more than willing to pile on, throw water on everybody's talk of a recovery in Groupon and get this thing down to $5 and get everybody on the street that has to puke up their shares if you think it's doing better. If you think it's worse, you just pile on in the short sell camp and try to get those people to sell down around the $5 range, because as it hits it, they will be forced to sell. I suspect we're probably going to see something like $2.50 on Groupon before or if you even thought about buying this again. We come on Facebook, of course, on Thursday. Its lockup period is going to be over. This thing's kind of been bouncing around these lows. I suspect we have a slightly different condition in Facebook, and that's going to be a lot of these funds have lots of money in this. I'm looking for the upgrades, a lot of PR, some talk about how they're going to actually make this thing pan out as they decide to try to support this thing as long as they can into the lockup period coming out on Thursday. So I'm thinking that this will be one of the weaker stocks, but I haven't heard much from the PR engine yet, but I suspect it's coming. A lot of people don't want to take the bath, and most of these holders have the kind of clout to put the PR machine into effort to try to find a home for these shares before the huge billion shares becomes available in November. And that's probably the biggest thing, is try to get out now before the absolute deluge of October, November lockups come out on this. Estee Lauder was also interesting. Some people call this the lipstick indicator, and that is a name that came out because of at the end of markets, a lot of people or a lot of women will start buying less expensive things than handbags. And that's people kind of putting Coach together with Estee Lauder. We'll talk a little bit more about the lipstick indicator when we come back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
I had a couple questions in the den, so we'll talk about that. Coors, and we'll get to Eagle Rock Partners, which is another question in the den. But someone asked what really pushed Coors up, and that was that it was one of the few IPOs where people actually used the money and needed it to rapidly expand. They already expanded into the IPO and were able to pay off a lot of the bills, take that money. But they've got hot products. Women really like them. Can't afford Prada, and Thinking Coach is a little too mundane for a lot of people. Really have hit the sweet spot. I know he makes a lot of other like flight bags and stuff like that, but my understanding is he makes a lot of money on selling non-Prada style women's handbags, a lot of that kind of stuff. And apparently they like the styling, and it is the chic thing to have, and it is hot. But Coors actually did do the right thing, and that is their product was hot, and they've expanded wildly in the amount of stores, and are going to continue to wildly expand in the amount of stores. But that and they could do well in Europe in a horrible environment has pushed them up significantly today. Symbol is KORS if you haven't looked at it. But one of the few IPOs out there that was done for the right reason, i.e. we need money to expand, not for the CEO to get out like Facebook. And, there's other reasons to go public, but the right reason is we need money to expand. and it's better to have a bunch of shareholders than a bank telling us what to do. Eagle Rock Partners had a huge move out here today. I really like this stock because, of course, I made a lot of money on it before. And part of that money came from the March lows of 2009. This stock is one that gives fairly decent signals. It's up today, actually, if you go back and look at that 2009. I've got it zoomed in here on Tiger TV. But this is what I liked. It got slammed down, huge volume, got down to, on May 14th, 2009, what was it? $2.94, 1.1 million shares. Crawled back down underneath it on July 13th. And got to 265, but just on 300,000 shares, popped back above it. I held it for a while, up to, I'll have to go back and look at my records now. I held it for quite a while. But it was a nice pop-up off those lows, especially in that one that I really liked. Of course, came back down. It's been doing a lot of consolidation and work back in here. Of course, the question is probably today is why it's popped up and why it's really moving. Eagle Rock Partners, huge volume, huge move. Had some fairly large short interest and a pretty high volume day yesterday to push back and close back in the trading range. They have a approved secondary to buy a lot of the assets from British Petroleum in the Gulf. A lot of these are proven reserves. BP is trying to get out of and under the U.S. government's thumb. They're more than willing to trade out of what they have here now to go to other countries where the regulatory climate isn't giving them a I can't even say it today. Colonoscopy, he said. And that's it. BP just wants out. They're going to be selling a lot of their stuff. They're already talking about at least $9 billion in sales to various people, and Eagle Rock got the cash, and it's looking pretty good for them. But I think it's two things. One, a lot of people were very short Eagle Rock, and the news came in very good when most people thought they'd have trouble raising the secondary, but it looks very strong for them out there. Eagle Rock, of course, very heavily in natural gas, and I believe that's what they're going to be buying from BP is a lot of the high percentage natural gas wells in the Gulf area, especially around Louisiana, where they are kind of persona non grata. But we'll have to see how that goes. Of course, you're not seeing a lot of movement in natural gas lately. Numbers come in tomorrow, but I suspect that a lot of the energy, we're probably going to see a pop in natural gas tomorrow just because of a huge heat wave in the western states over the last few weeks, and most of those places do use natural gas for power generation, a lot less than, let's say, down here where we use a lot of coal. But interesting. Anyway, we get back to the news here a little bit. Groupon still having problems. When we come back, basically, we're getting a lot of warnings from Greece, and we'll take that story one level further. Anyway, we'll be back in just a second.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we go through another day, just more of the same out here. We've got a market that's going nowhere. Up a couple points on the S&P. Yesterday we ended up with about 2.4 billion shares. Just ridiculous volume. 1.8 billion shares right now. Looks like we're probably going to come right into that neighborhood. Pretty much the same today. I've got a lot of stocks. I'm more than willing to sit here short. And we're going to see a little of what we've got, but just on this light of volume, I have to be on the short side of this marketplace. And we're going to get into the reasons why I continue thinking that something's coming on. A couple of news articles hit my desk here, and we'll talk about them. First, I wanted to get to Safety Clean. Safety Clean's a North America leading provider of used oil recycling and parts cleaning. These guys have been around forever. I talked earlier about the reason to actually have an IPO, and that is to expand your business. I'm not interested in buying IPOs unless they do. This is not one. This is a second attempt after a failed one in 2008 to raise additional money. And just a lot of these companies that are owned and private, they want to find a way of being able to sell a portion and cash out in the company and that becomes problematic if you can't sell shares in it, especially the level of a company like Safety Clean. Unfortunately, the wrong reason to go IPO for an investor, even a trader, because generally these perform rather poorly, let me put it that way. And even at best, IPOs have been spotty, but don't think this one's going too far. Google's spent a lot of time around DARPA lately, and starting to take up some of the ways of DARPA. If anybody's ever read it, I recommend it highly. There's a book about the Skunk Works, which is a division of aircraft, the people that made the stealth bomber, the F-117, made the a lot of the top secret jets of the Cold War. But they had a lot of principles that got kind of transformed onto DARPA, which is get it done cheaply, get it done quickly, and get it done. But use whatever you can off the shelf. A lot of those principles are very well preserved in the book from the CEO of that company. But Google's trying to streamline and make more skunkworks-like. In fact, you can Google that if you want to find out more about the skunkworks that developed a lot of those planes. But Google's going to take that and try to take Motorola from making its 27 phones it introduced last year down to just a few. They're going to focus more on generating longer battery life, improved cameras, and new features like voice recognition technology. I suspect this is where Google is going to slam Apple in the end, and that is being able to hook their voice recognition technology into Google's search engine, which is far, far superior. Siri was a preemptive strike by Apple. If all you have to do is use a search engine that's powered by Wolfram Alpha, which is what Apple uses right now. And, of course, Google's search engine is still the best by far, by magnitudes. But look for them to start bringing a lot of that back in, like Microsoft is hiring its own engineers to help in a lot of the hardware that goes around what they're selling now. Look for Google to do it. Steve Rhodes asked me on one of our shows, we were doing the Tech Insider Hour, which big company I would think would be the best. To me, Google and its search engine, whether it's online or whether it's going to be some kind of Siri-like product, I think is where they're going to make more and more money. It makes a lot of sense to me. I can hardly read anything on my smartphone. That if I could just talk to it and say, I need to find so-and-so, the combination of being able to talk to it and have it do decent searches, I think is going to be the one of the holy grails of mobile. And nobody better situated right now than Google to do it. There are numbers out. We've talked about how Android has outsold iOS devices. They continue. Gartner's got numbers out, so this is not just what Samsung and Apple are putting out there. We've got some fairly good stuff from the Gartner group. They're still capturing 64% of the worldwide market share. Samsung was the top dog, accounting for 90 million handset sales over the last half of the year. The Peregrine CEO was indicted yesterday on 31 counts. This is the guy, if you kind of vaguely remember it, that tried to kill himself, and he's gone 31 counts of making false statements to the Commodities, Futures, and Trading Commission, which I figured was just what you did in business. But apparently you can go to jail for it, and he's going to be probably paying the ultimate price, I would imagine. When I was talking about what's going on in these markets, it certainly looks to me, we've had some talk of the plunge protection team in the den. It is certainly a market that's got the heavy hand of someone on it, and normally when people talk about it, most of the time it's kind of black helicopter stuff. This market does not keep this kind of low volume without a heavy hand on it, and I would suspect it's Geithner sitting there juicing the futures every day, trying to keep this market level. And I thought, why would he do it? But there's a good article in Der Spiegel on why it is, and that's bank companies and investors are preparing themselves for a collapse of the euro. This is from Der Spiegel, which is the big kind of news of Germany. But apparently they've got several articles, but this one I thought was the best. There is a huge amount of hard asset buying by people in Germany, both real estate and bonds. Anything that they can get that's not denominated in euros, gold, and other stuff. And apparently this has dramatically accelerated over the last 2 weeks. My guess is that Germany is not going to decide to fund all the rest of the euros, and or at least enough people are doing it that it's going to be a self-fulfilling prophecy. The euro is remaining stable right now, but I suspect that the vote that's coming in on the 12th of September is not going to go well, and I think that Merkel already knows about it. She is the last head of state for anybody that's voted for any of this kind of stuff, and I suspect she knows she'll get kicked out too if she does it. We talked a little bit about yesterday about the ECB minutes of the 7 dissenters out of the 23, I don't know what they call them over there, but they're like the Fed presidents over there in the ECB. 7 pretty much declined to say that they wanted to take on Draghi's do anything attitude. Of course, when we find out who the 7 people were, they were both basically all the people, the representatives of Germany, and some from England, and others that were doing well in France. So it looks like the bigger companies that are doing well or not in imminent danger are not looking like they're willing to bail out all the people in euro, no matter how much Draghi says that he is ready to do it. He's going to need the Germans. They own about 80% of everything over there. And I think most people never really understand just how much Germany owns is backed. And the idea that they should throw away half their value to support a lot of people that want to work 35 hours, it's just not going to fly. They've had 10 years of austerity, bringing back in the East Germans and building their country out, and it's just not going to fly, at least according to Der Spiegel. So I did take high school German, spent a lot of time in Germany. The people there are kind of no BS people. They don't like slackers, and they continue not to be kind of the soft socialist Europeans that a lot of times we think about. I don't think that they're going to buy in for this. In fact, they've been giving a lot of flack to Greece just over the last few days, saying that you're really going to have to belly up to the bar, guys, to get going. I suspect we're going to find out that this hits the fan, the proverbial bovine excrement, in the not-too-distant future. Night trading, I thought a lot of this light volume may be attributable to some organic reason. Night trading dropped to 2% of the total market share. I thought, well, maybe this is some kind of issue with it. They have averaged over the last year about 12% of all the market volume. They're back up over the last few days over 10%, and that's close enough to the 12%. We shouldn't see ridiculous volumes like this in the market. So one of my ideas of why we might see some kind of skewness for the data on the super light volume is not there. Pretty much this afternoon, and it may have happened already, they're going to be doing a test firing of the Wave Rider. This is a hypersonic rocket, but kind of interesting. Probably not going to make a lot of money on this today in the market, but very interesting, and looks to be the prototype of the next Concorde when it does become available. The speeds would get you to from London to New York in about an hour. But probably going to be used a lot more likely to launch satellites in the near future and put men into low Earth orbit. This kind of technology is great for these companies talking about space tourism out there. Apple came out with a new patent. That patent basically is talking about a much thinner display. Of course, they're trying to make their phones even thinner. But some new patents hitting on Apple, of course, in the background of all the knockdown, drag-out stuff going on in Apple and Samsung's legal disputes these days. And anyway, we're going to get to some charts here, past the ones we've already looked at. Let me pull up some of those. I had a few stocks making some decent moves out here, so I'm going to actually take a look at them. Got some tests out here. One that I thought was kind of interesting was VLO. This had gotten up to the previous highs and looked like it didn't have a lot of energy, although it did have a nice gap up on the 31st of July out here, and with some decent volume. But it's kind of come up here, stumbled, making a doji today. What I'm looking at in it is the March 9th high, $28.68, 16 million shares. We get up in here the last few days, 12 million shares, 9 million shares, 8 million shares, 7 million shares, 7 million shares, 5 million, probably 6 million today. Going to be very, very light. But what's the close on that? Still about going to be bouncing around. Look for the close on this thing to see whether it closes below $28.68. If it does, you have a valid sell signal on Valero. We were looking at crude. It's up a little bit, but not a whole lot of energy on it either. $93.37. You think with corn going to astronomical levels, not being able to be used, we'd be back over $100 fairly easily. You've got Iran threatening to close the Gulf every 5 minutes. That we can just get into the 93s here makes me think we've had nothing but a big bounce off the $80 level, and we're probably headed back to that $80 level. And the whole crude market started at about $48. Need to actually convert that for inflation, probably around the mid-$60 level range, probably a bottom in crude. I don't know when it's going to actually crack here, but I suspect all commodities seem to go to the unbelievably high prices, and then like natural gas come down to some ridiculous price. I think that ridiculous price is probably somewhere around $65 on crude, and we'll be watching that in the near future. Joe is the St. Joe Company. They are, if I'm not mistaken, a big housing builder out here. Yeah. Real estate development, mostly in Florida here, which I find kind of interesting. They've been going up, but again, the last big major high they had out here was May 3rd, $18.72, 930,000 shares. We got a little bit more than that, so it could climb back and maybe hit this gap up in 20, which is I'm kind of watching. But a lot of these companies, and when you look at the ETFs, have already rolled over on the housing markets here or hit high volumes. Harris Communications kind of interesting because my company ended up being bought out for them. Or from them. We'll talk to them just a little bit. We'll get to David in North Myrtle Beach, and we're going to talk about, I guess, RACS, which is Rackspace, and FIO when we come back from the break. Anyway, David, please hold on, and we'll get to the last segment and hit both these stocks. Thanks for the call. Again, you can always call at 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we've got David from North Myrtle Beach in Florida here, and hopefully you're on the line there.
I'm here, and I appreciate you taking my call. I'm calling on RAX and FIO just as two examples. I've been fortunate enough to own both those stocks before their breakouts, and I like them both on a long-term basis. However, stocks have been known to correct occasionally.
Yeah.
And I've been wondering, do you take part of your profits now? Because I was hoping to buy more of these shares as it went up. And, of course, it jumped so quickly I was unable to do that.
I'd be out. We'll go through both of them, but I was looking at them during the break. I'd be out of both of them in a heartbeat. I suspect they did break out on earnings. Most of this, though, I suspect was heavy short covering. What I do not like is no follow-through 2-3 days later. Let's go to rack space first. You've got earnings. You pop on earnings, right? It closes lower than it opened on that earnings day. You go sideways for 4 days. And that's, I mean, normally you want to see either a pullback on light volume. You don't want it going to sideways. Sideways is a good indication that that basically what you have is a lot of short covering, people holding it up, and it's going to pop down one day. I would say that you'd probably want to see if you could get in the low 50s on rack space. And on a pullback, not a lot of money back out here, but you hit $57.12. I probably would have rang the register on that morning. Of course, you got to, you kind of came into a decent gap, and that gap is going to be resistance for a while. That gap happened on 12.6 million shares on May 8th. When that thing popped down, that's what you hit instantly. That was your sell signal, probably in that day to get out of it. Things are probably improving in rack space. I suspect that low 50s is a good opportunity to get back in this thing if the market's fine. I basically continue to see these super low volumes, though, just scaring me to death. Every time I've ever seen these, the wheels have fallen off the wagon of the major markets. I would be taking my cash in rack space. There's also a lot of kind of pushback against cloud computing right now. A lot of these companies are not backing up their data the way they say they are. It's just too immense for them to do it, and some have gotten in trouble on it. FIO, another company, of course, making those, but exactly the same thing. Huge gap up, huge volume. What I don't like is that huge gap and really no volume after the first day. And I mean, normally you want to see maybe this thing continue moving. Maybe you get one more leg back up or a test of that $29. This one's kind of the same thing. You've got a gap down that happened on April 26th, the day after. Volume did pick up fairly strongly into 9.6 million shares. Certainly, you've got 400.4 million shares yesterday. Probably going to come in with that. I suspect this thing's going to get back to about probably that $23 level. You had that May 14th high off there at 4.2 million shares. I suspect if I'm right in the market, so the wheels fall off this market, you're probably going to see these things race back down to that. And at that time, if the market is corrected, which is probably going to only take a few days, I suspect that we've been dragged up here on very light volume for a while, that this thing's going to rapidly and viciously correct, and no one's going to want to buy it, and that's exactly when the market probably needs to be bought. So
got it.
I'm thinking
your input.
I just would I'd be very worried with this extreme light volume of being long on anything. I want to thank everybody that listens to me every day, and hang on for the next couple hours. We're going to have a great 3 more hours of programming here on TFNN. You all have a great and safe evening.